Today is Thursday, July the 18th, and CNBC just flashed that the market ended up because traders are expecting the Fed to come to their support. So it's no longer about the economy, it's about the Fed keeping things hot. Gosh, I'm old enough to remember in 2009 when Bernanke was lowering the Fed rates, and Jim Cramer was saying he didn't know what he was doing. We need it. Well, never mind about that. Okay, so advancers led decliners 51 to 43, not very much. So that is going to keep the oscillator pretty much where it is in limbo. The Dow finished up 2. No big deal. NASDAQ popped, and the S&P finished up under 0.5% with the typical volumes that we expect, but the Dow volume is really lagging. I mean, we've seen a number of days now where the volume is 60% of its relative volume. That has to give someone pause for thought. So let's go look at some stocks. Let's look at banks for a second. So here we've got 5 different banks and the XLF. Banks have all reported their earnings. And what we see is with Bank of America, a 1, 2, 3, 4-point trend line, and we've come back up and stopped at that trend line for the 5th time. With Fifth Third, arguable, this certainly it is affected by the trend line. One was creating the trend line, 1, 2, 3, 4, and has been unable to hit the trend line. JP Morgan is the only stock that doesn't look like the others. US Bank up at 78.6 of this Fibonacci and stopped cold, which is also this high and this high. So US Bank is going to struggle for a while to get above that. Now, rates, remember that the banks have all benefited from the Fed rate going to 2.5%. And look at your savings account. Are you getting anything more than 0.25%? Meanwhile, they raised interest rates on their credit cards. And when the rates go down on July 31st, if they do you think your credit card rate will go down? But the banks will not be able to play the spread between that 0.25% and 2% like they played it between 0.25% and 2.5%. So that is going to hurt them. The XLF has this same trend line that we're seeing for other stocks. 1, 2, 3, pop over and came back to get support. Citigroup Citigroup has double topped here, but it's above 78.2%. So what do we see? We see the banks all struggling with resistance, even though they've just enjoyed what could be their last good quarter. So be careful. I am a big holder of US Bank for a number of reasons. And I hold a lot of Canadian bank stock, Royal Bank, Bank of Montreal, and TD, Toronto Dominion. The market up 10.69, 0.36%, just stopped at the 8 EMA. That's where the resistance was. So tomorrow will be critical. Do we break above the 8 EMA after having finished 2 days now at or below that point? Apple had a big day, up 1.2%. Let's make sure Apple is feeding properly. 205.66, 205.80, close enough. This would be after hours trading. So Apple is looking like it's just moving up with the 8 EMA. I don't hold any Apple right now. They're reporting the week after next. Caterpillar goes ex-dividend. Tomorrow will be the last day that people can trade Caterpillar with the dividend. So we said that sellers would continue selling rather than wait for the dividend to be paid on August the 19th. So anybody who was selling in here saved $1.03 by not holding on to it, and so they have effectively sold and made their dividend. They can come back at the 200 and buy again and wait for the next dividend cycle. But this was a doji day, a day of indecision between buyers and sellers, and very, very low volume, no commitment to buy or to sell the stock. WDC finished the day at 52.88, not 51.49, so there's a feed error there. TD Ameritrade feeding data to MotiveWave continues to be a problem. Not a problem with MotiveWave, that's a problem with TD Ameritrade. Whirlpool, let me double check. Whirlpool finished at 150.38. That feed is correct. So that's a pretty strong stock, but they report earnings after the close on Monday. So I'm going to hold on to what I have, and I have the short 145 calls. Next week's 145 calls. So it's too soon to close out of those. If it falls back, I'm well protected. If it takes off, I will get the profit that I had planned on when I did 400 covered calls. I bought gold today, so I now have 1,000 shares of gold. I used to have 700, moved up to 800, and now I've got 1,000. Big day today, up 4.3%, 4.36%. And when we get the stock, when we get the chart, try to get a 1 hour chart. Yeah. Something slow with my internet. But when we get the chart, you're going to see, there we go. Look at those two pops in the gold miners. We called this pennant here on Tuesday, right after Trader Stewie on Twitter had signaled a pennant, bull flag or bull pennant in GLD. We saw the same thing in GDX, the gold miners, and bang, pop, pop, 2 days in a row. It has been a fantastic stock. So my shares are doing just great. I've got $2,000 profit now. Remember, I got out of GDX somewhere around here, and I've bought back in again. I'm going to continue to hold, but tomorrow could be a day where the profit takers step back, and we could have an inside day today where the candle will trade certainly inside this big long candle completely. We may not see 28.32 tomorrow. It's just typical that we would have an inside day after two big pops like this. Plus it's a Friday. See you tomorrow. Should be interesting. What do we expect in the market? Caution is what we expect.